Hello and welcome. This is Timur Badiev, and for my final project, I prepared a retirement savings calculator. These graphs and numbers show you the final value of a retirement portfolio adjusted for taxes and inflation. I used Solver to figure out the ideal contributions to 4 different accounts: 401k, traditional IRA, Roth IRA, and a money market CD. I also used Visual Basic to create buttons to simulate different economic conditions. As you can see, a 30-year-old person who makes $75,000 a year and puts $10,000 of it away can expect to have $350,000 in savings by the age of 65 under recession, $500,000 under steady market conditions, and close to $1.5 million under market boom. The last graph visualizes the general idea that the higher the income is, the higher the percentage of it is getting taxed. On a tax calculation sheet, you can see how the numbers came together. I used a simplified approach, assuming the user is single, going to remain single through the retirement, and doesn't have any additional deductions like mortgage or tuition. I also ignored Social Security benefits and company 401k match. The savings can be broken down between 4 accounts and must equal a predetermined amount. In this case, $10,000. To calculate taxes, I wrote down the tax brackets, deducted 401k and traditional IRA contributions, and compared the taxable income to the brackets. If taxable amount is higher than the income bracket, then only income under the bracket is taxed at this rate. Otherwise, whatever is higher than the previous bracket is taxed at the current rate. As you can see, it's a rather long formula, but that's really all it does. When calculating the taxable portion of the retirement income, it's the opposite of that. Traditional and 401k contributions are taxable, and CD and Roth IRA withdrawals are tax-free. I used a formula for the future value of an annuity to calculate the amounts in each account. The only difference with the CD account is we'll have to pay taxes on the interest right away. That's why the interest rate is reduced for taxes. To see the current tax rate, we have to look at the tax table and see at which point the income under a particular tax bracket first became zero, and the income tax in one bracket above it would be the current interest rate. I decided to use a VLOOKUP function to find zero in a column, but quickly realized that VLOOKUP can only return a value to the right of the one you're searching for. I had to find a way around that, so I used a match function and an index function, and it worked perfectly. So I used Solver to minimize the total tax paid for the lifetime. In order to use Solver, I had to cap 401k at $18,000 and traditional and Roth IRA at $5,500 each, as it is the law. Also, the total contribution had to be equal to the predetermined amount. So, as you can see, a person who makes $75,000 a year and puts away $10,000 a year should take a full advantage of 401k and traditional IRAs and put a little bit of money into Roth and CD. However, a person who makes, let's say, 30,000 a year should put most of his money into Roth and even to a CD. Just because his income rate is lower now than it's going to be when he retires, so it's might as well be better to just pay off that tax now. Now a person who makes a lot of money and puts away significantly more, let's say 50,000. Now that person will maximize his or her 401k, traditional IRA, and Roth IRA. And then we'll have to put the remaining in a CD, even though it's not as advantageous, but we'll already reach the cap on all three contributions. So finally, let's go to the buttons. The macro for the buttons sets the inflation rate at 4% and market interest rate at 4.1%, right above it, under recession. Then under steady market conditions, I assume the inflation rate would be 2% and market rate would be 4%, and under economic boom, the inflation is only 1%, but the market rate is 8%. Notice that the macro had nothing to do with the arrows on the top of the buttons. All three arrows are actually there, but I used conditional formatting to color them red, blue, or green if certain conditions are met. And otherwise they just painted white. Thank you very much. Hope you enjoyed the presentation.